Good morning, everybody. Today is Tuesday, July 14th, and this is our pre-market analysis for QOL trading. What you see right now is our homepage right now at QOLtrading.com. When you get to the page, put your name, your email address in here, and you will be on our list for our free weekly newsletter that we put out every Sunday. And in that subscription, we go over the market and review and what's to look ahead. I go over price levels for futures, broader markets in the Tesla, Mag 7, geopolitical news, and then any future economic data for the following week that could potentially impact our trading. And then if you want to join our Discord community, you click here, the live desk, or you can click the Discord symbol up here. It'll bring you to the WAP page right here where you sign up. Down below here in the, actually not the left there, down below here in the left, you can join for free. And then in the, if you want to join our trade desk, it's from 9:30 a.m. to 11 a.m. Eastern time every day, Monday through Friday. And in that room, we do live trading, pretty much Tesla options. And I answer any questions that you may have regarding trading as well. And then also with our new QOL ORB Scalper, you can purchase that down here, or you can get the Scalper plus the trade room down here as well. And the ORB Scalper is oh, we had some economic data. Nice. Market's popping pretty nicely. So in the scalper right here, what you'll see is it pretty much plots the opening range, whether you have it on the 1 minute, the 5 minute, 1 minute, the 2 minute, the 5 minute, or the 15-minute charts. You can apply it to any symbol, any futures, any foreign currencies, crypto, and it works the same. And just to show you an example here, in the lower right-hand corner, it gives you your table, so you don't have to do any guessing. This is, right now, this is a 2-minute chart. Let's go to a 1-minute chart. See what the 1-minute chart looks like from yesterday. So here's your 1-minute chart from yesterday. It gives you your price levels. Yesterday, let me see if there's a better one here for us. Gave us a little more signal here. Okay, so here was the 5-minute yesterday. Sorry about this. So here's your 5-minute. It gives you your opening range. Down below here on the right, it gives you your high of the range. This is yesterday, 405, and the low was 399. And then it gives you your mid-range here, 402.67. It gives you the total dollar amount of your range, 593. It rates the range quality. It gives you your what kind of grade it is, whether it's long. Currently, it's measuring the current market right now, and obviously the markets are popping right now, so it's giving you a long grade, long bias. It's giving you a long grade, it's giving you a short grade. So it's giving you an A for long bias, right? So the market's pushing. It's giving you a C for a short bias, meaning that if you're thinking short, it's not really a good probability. So right here, it gives you your break, tells you to take a short, or you could take a short. You have to make your own decisions. This is all for educational purposes, and we try to take away as much discretionary as possible out of your trading, right? And then it gives you your price levels here, right? So here's your break of the low right here. It gives you your first price level on the downside, gives you your second price level on the downside as well. It then tells you when it measures ATR, average true range, and then with volume combined, and then it tells you that, okay, well, the direction you're taking the trade, you should consider exiting, right? And so then it gives you several different signals. And then, of course, you have to make up your own decision. You can see as you go along, like this was a choppy day from Friday. You know, it's telling you short, exit, exit. When you see these yellow squares, a lot of the yellow squares, that's telling you it's a choppy day and you're inside the range. We're looking at a 5-minute right now. If we looked at a 15-minute from yesterday, it's going to give you less noise. And it's going to be a little more clearer of a signal here, right? So you had two signals here on the 15-minute. You had your break, and then it told you towards the end of the day that short is over right now and that you should be going long there, right? So I typically have this on my 1 minute, my 2 minute. That's a 5-minute right now, or 15-minute right now. So I do the 1 minute, 5 minute, 15 minute. I have it up here, and I keep it up here. It gives me my alerts and everything. So anyway, so you can get all that by going to the WAP, and you can access all that. As far as the live trading desk, you get a day trial on this to come and check out and see what's happening in the room there. Let's get over the economic data. Obviously, there was some positive news. It seems like the markets were popping initially off these numbers here. Core CPI, they're not updating for me here. It was flat year over year, 2.6%. It was anticipated 2.8%, and month over month, it was down 4%, 0.4%, and then year over year, it was 3.5%. Expected was 3.8. Should have a positive impact on the market. So let's take a look at things. Before we get going, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. We're starting here on the VIX here. So we're looking at the VIX. So the VIX, was elevated over the weekend with that geopolitical stuff that's happening out in Iran. And now today we are, so right now with that economic news right now, it's below the 50-day moving average at $17.30, and now it's below the 20-day at $17. As long as we're below that $17, maybe we can continue to flush down to this gap up that we had here from Friday down to the $15 range, which would be good. When the for the volatility index, it measures the kind of stability in the marketplace is the way I always figure it, right? So it's good we're pushing down. However, we do have some gap downs that are still open up top here. One from April 8th at $25.74, and the last one we have at $30.34. So you got to watch those levels as you start moving. As long as we're below this, the 200 is sitting up at $18.71, and now you've got the 20 and the 50-day kind of right on top of each other. The 50 at $17.30. So as long as we're below that, maybe the markets continue to push higher. But we'll see what happens. You just got to read your price action as the day moves on. Let's get into oil. Pay attention to oil. Oil got a little elevated, obviously, from the weekend because, there is still some tension that's happening out there in Iran, which to me personally, I am not surprised. Oil's above the 20-day moving average at $73.07 a barrel, above the 200-day moving average at $74.30 a barrel. We have this gap down here from June 15th at $84.34 a barrel, and then the 50-day moving average at $86.65 a barrel. The positive thing about oil is it's well below the $120 level when the war in Iran first started here. So just watch that oil level. Right now this elevated stuff is not good for our retail pocketbook when we go to the gas station, is what that means. So let's get into the ES, some futures here. So you can see we spiked off of that number here. Had this open point of control here from yesterday, as a matter of fact. And you can see right here, it closed that, and now it's respecting it. So I'm not looking long. Today, if I was trading futures, I would not be looking long unless you can break and hold above the 75.95 level, and then possibly get to this gap down level that we had here from Friday at 76.24.79 level. If you can break above that and hold, I think you can then start making your way back to the all-time highs at 76.93.75. It's a positive move right now. We are looking at a 15-minute chart. We are above the 50-day moving average, above the 20-day moving average. The 20-day is sitting at 75.34.89. As long as you're above that, I don't mind the longs. So maybe your thesis today is looking for pullback longs. Maybe you pull back into yesterday's close to take a long there. If you lose these levels here, obviously, if you lose the 50 at 75.15.48, you're going to come down here to this low at 74.80. And then below that low right there, I don't have anything until 74.27. So hopefully get a pop and hold, and then you can start making your way back towards the all-time highs. Let's get into the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video for me. And, we're at 149 subscribers, people. So give me another subscriber here to get to that 150 level. It's all organic. I do not do any advertising. It's all based on the videos that I've been making. I've been doing this since September every day, almost every day. And hopefully you're getting some good uses out of it. So we are getting a little pushback here at this level here. Did not quite close that gap here from Friday at 754.91. We're looking at the SPY right now. We're on a 15-minute chart for those of you. Take a snapshot of my levels here, people. You got to hold this 750.25 level in order to continue to move higher. Same thing on the SPY as I was talking about with the ES. We have an open point of control at 757.70. If you can break and hold above the gap down from Friday at 754.91, you move into the 757.70, you'll probably get a little headwind up there, maybe a little pullback. If you can break above that, then you're moving to all-time highs at 760.40. Downside, if you, I'm just going to keep it simple here. If you lose yesterday's close, pull back to 745.21, and it's sitting just above the 20-day moving average at 744.38. So just so you can understand how to read price action and read your thesis coming into today, if you're over the moving averages, it's bullish, right? So we're over the 20, we're over the 50. I'm not even sure where the 200 is on this sucker. 100 is way down below at 710, and the 200 is way down here at 694.91. So we are in a bullish pattern here. So even though you sold off a little bit yesterday, market's popping back. So got to break and a hold above the 754.91, and then you can push into the open point of control and then the all-time highs, hopefully. Let's get to the Nasdaq. I was saying the other day, Nasdaq seems a little sloppier. However, it's trying to get above this 50-day moving average. Get above it, break and hold above this 50-day moving average at 29,000, call it 792. I like the upside. However, you could be caught in between this little consolidation period between the 50 and the 20. The 20 sitting at 29,983.81. I'm going to say the same thing about today. I like a long, if you could break above this 29,999, we're just going to call that 30,000 even. If you break above that, then you can make your way back into this June 16th high at 30,545.75. Downside today, I'm going to say you got to hold this low here, 29,507.67 if you pull back there, right? So I do like this level here, this 50-day. I like a thesis here. If your market opens up, pulls back, as long as we hold this 50, I like us to push into the 20. You're probably going to get a little headwind, a little reaction up there. But if you plow through the 20, then I think you can start making your way back to the June 16th high, 30,545. Okay, let's get into the Qs here. The Qs are going to be very similar to the Nasdaq here, but you can see we are closer to the 20. It did pop up to the 20. It rejected the 20. So we'll see what happens when the market opens. If you can get that push and hold above the 20, I like us pushing back into this 726.39. It's Friday's high. If you can get a break above that, 730.83 is my next level to be shooting for. And then if you can get above that, 737.43 is the level that I have up there. If you get above that, obviously you're going to start breaking towards those all-time highs, or you start moving towards those all-time highs. 748.65. Same thing on the downside. Got to hold this 711.10 level. If you flush down there, if you lose that, maybe you come back down here to this post-market low, 707.56. And if you lose that, you could come back down here to the 723 level. I don't mind this level. Actually, you could see the nice reaction that we had here, which is a filled point of control at 611 from June 11th, rather. And if you lose that, you're going to pull back down. You could flush down to June lows at 686.37. So right now, things seem to be pushing higher right now. So my thesis coming into today, so I'm looking for pullback longs. So hopefully, with all that data that came out, we can continue to push higher. One thing to keep in mind, you do have Kevin Warsh speaking tomorrow. Let me pop that back on there for us to go over that. Let's see here. So tomorrow you have some more numbers here. Sorry, I'm going backwards, but you got PPI, core PPI tomorrow before the market opens here. And then right here, you're going to have the policy report, and you're going to have some Fed speak that's going to happen. I don't know if is Warsh speaking today. Warsh is speaking today, so be prepared on that. He's speaking a half hour after the market opens, so make sure that you have your positions appropriately sized for any kind of things that come out of his mouth. But from his stance on what he was saying he was going to do, he was not going to be giving any forward guidance here. So let's get into our Mag 7 here. Looking at NVIDIA right now, you're going to have to get above this 208.76. It's a May 27th low. This could be a break and retest. It's possible that you could get a rejection here if you can get above that 208.76. I like us moving in at 213.99, and then of course if you get above that, I've got a 219 level, 219.09 level. There is your next target on the upside. On the downside, got to hold this 204.13, people. If you lose this, then I think you come down to yesterday's close. And you probably come down to the 20-day moving average, which we did not come close to yesterday. And that is sitting at 201.88. But, like I was saying, we are above these moving averages. So if you're above the moving averages, it's bullish. So if it's bullish, you're looking for pullback longs, right? And then if you lose these moving averages, then you have to start reconsidering what kind of position that you're taking there. Okay, that's NVIDIA. We're going to try to plow through these. Apple, I think we made our new highs, Apple, yesterday. Yes, we did. All-time highs, 323. Mark that for us. 323.45 on Apple. Uncharted territory for us. So I did not have any levels for us. The only level I had was a Fibonacci extension level, 127% Fibonacci level at 334.98. Now we have a little data here. So we have a previous all-time high at 317.40. As long as we're below that, I don't like the longs. If you can get a break above that 317.40 and hold, I like this to be a nice little speed zone. We can then push back to the 323.45 level. As long as we're below this 317.40, I'm not liking the longs here. As a matter of fact, you could possibly pull back here and get some flush here. I don't have much that's giving me some confidence on support here until this 305 level if you do flush. So watch your levels there. Break and hold above 317.40. I like the longs. As long as we're below it, I would be careful on your longs up there. Okay, let's keep moving. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button for me. Appreciate that. And let's go. We are looking at Meta. Meta, good little pop here on Meta. Rejected here. Yesterday's close. That's going to be your line in the sand. Got to break above that 650, 673 in order to continue to push higher. If you do not get above that, I don't like the longs. You do have the 200-day moving average sitting down here at 642.22. Must hold that. If you lose that, I think you come down to this regressional trend line that I have here. It's the upper regressional trend line, so not a bad level if it does flush down there, and that's from October 19th, 2025. If you lose that level, you got a 618.70 low from May 23rd. That's sitting just above the 100-day moving average at 615.93. So not liking longs unless you can get above yesterday's close, 656.73. Moving on, Google. Google, same thing. Got to get above yesterday's close, 350.67. You saw we lost this 352.83 level. It was a June 24th high. And so you can see right now, just like I was saying before, if you're above the moving averages, it's a bullish signal, right? So you can see we have the 50 all the way up here at 370, and we have the 20-day sitting at 355.53. This is bearish to me. That means that as long as we're below these moving averages, I'm looking for pop and fades. That's my strategy. Do your own homework on it, but that's my theory on that. You could be consolidating in between this 100-day moving average at 340.54, between 355.53. Not looking long, you could take your longs here, but the risk on that, this is a no trade zone for me. It's kind of caught consolidating a little bit, so you got to break one way or the other. If you lost the 340.54, I don't mind that break down here to this 330.47 level. And if you lose that level, you've got the excuse me, what did I say here? Yeah, if you lose this 330 level, then you come down to the 200-day moving average at 319.39. Okay, let's move on. Let's get to Amazon, and then we'll do Microsoft, and then we will move forward. Amazon, I'm liking Amazon. We are above the 100 and above the 20-day moving average. The 100 is sitting at 238.02, and the 20 is 248.48. Not bad. Above the close from yesterday, I don't mind that. So as long as we're above this 247.37 level, I don't mind this pop here. But you can see how it rejected the high from July 7th at 248.93. Got to break and hold above that 248.93 in order to continue to push higher into that 352.53 level. And then if you do get a push up into that above that 252.53, I would expect a little headwind here at the 255.19 level. It's a low from May 1st, which would give you a little bit of a break and retest level, right? So you broke the low all the way over here, and you're coming back up to test it again, right? So those of you that know your strategies, break and retest is a very good strategy to have. But you can see there was a lot of sellers over here. So I do like this. You saw here on the end of June, big pop and a big sellers came in here, right? So this is a big level that I've got here. This 652.53 level. If you get above this level right here, actually even the 248.93 level, maybe the sellers are done and they're exhausted and this thing can start popping higher again. You know, but you do have this 50-day moving average of 253.91, right? So I do like Amazon, but Amazon's been, you know, kind of like a heartbeat, up and down, so be careful with that. Okay, let's get into Microsoft. Microsoft, we know Microsoft has been getting hammered this whole year right now. Must hold this 374.39 level today. If you lose that level, you come down to 366.84, which is a May 29th high, or excuse me, low. On the upside, if you can break above this 381.91 level, then you can push up into this regressional trend line here. But I don't like the fact that we lost this level. So this is an upper regressional trend line that I drew since July, almost a complete year ago. So now we lost this level here. So I do not like any longs. As long as we're below this 383.62 level, I'd be looking for pop and fades. Maybe you push back into this level and then you fade it off of there. But one thing to keep in mind, you know, you look at this big wiki candle, this big solid candle here, and you're like, oh my God, look at this candle. It's huge. But you got to come down here. This is where your money is made. Look at the volume down here. This is pre-market volume. So you have to take that with a grain of salt. Yeah, there's maybe somebody that's trying to jump the market or get out of a position. But this candle right here, if you look at the size of this candle versus this tiny little candle right here, there's double the volume, triple the volume right here on this little candle here than there is on this bit long wick here. So don't pay attention to the animation that much. The animation is only to give you a direction, and then you have to look down here and look at your price action. Downside though, if you lose 374.39, you come to 366.84, and if you lose that, unfortunately, we're going to come back down to this 350 level. We are below the 20-day moving average. It's bearish signal for me, and this 389.45 level seem to be responding in the pre-market right now. So that's a big level as well. So Microsoft is really a no trade zone for me right now. It's just not really a great stock moving right now, but it'll turn around. Let's get into let's do SpaceX really quick. We talked about SpaceX coming down to this 135 level. Excuse me, I'm sorry about that, people. So we have to, you know, that's the opening. That is the open low from the initial IPO level. So, but one thing to note here on SpaceX, there's a whole bunch of speed zones here. There's a nice speed zone here from yesterday. So if the market can get that, you know, good acceleration here, I think you can pop into this 145.20 level and then probably get some resistance here. But we do have an open point of control at 148.04 where the market could gravitate to and then possibly push off of that level here. If you lose yesterday's lows, I think you're going to good chance you could come and test that 135 level, right? So hopefully it pushes up. It continues to push up. A nice little speed zone right here. Maybe some people getting out of a position or creating a new position. And so the people with the new positions here, they're going to say to themselves, oh no, we're wrong, and we better start covering. And so when they're buying, everybody's buying, and then it'll be a short squeeze. So watch that. Watch the levels right over there. There's some good volume going through SpaceX right now, but there's the option chains are just not working for me, so I'm not trading it. You could trade the equity itself, and that would be fine. So let's get over to Tesla. Sweet little Tesla here right now. Pre-market right now, holding the 100-day moving average. As long as we are above this 393.63 level, it's a weekly low from May 19th. I was looking at this level all day yesterday, trying to hold this level, and then finally in the close, we popped above it. So as long as we're above 393.63, I like the longs. You can see we are kind of trapped in between the 20-day moving average at 400. Just going to call it 400 even and change. And then you've got the 100-day moving average at 397.18. You could base your trade strategy off the 100-day. You could base your trade strategy off this weekly high from March 23rd, 396.23. Could be a break and retest. I personally like a bigger break before it comes down to retest. I don't like a retest that close. You know, so basically we broke 2 candles ago. To me, that, you know, I like to have it, you know, a big break, you know, like maybe 20 candles and then come back down and retest that level, right? You know, when it's right on top of it, we just don't know if it's a false breakout or not. So, but these levels, take a snapshot at these levels. You know, these are going to be important levels. If you can get through the 20-day moving average of $400.66, I'd like us to move back into this 403.51 level. One thing to keep note here, here's a big speed zone here from yesterday on Tesla. And if we go back on Tesla and we look at what Tesla does here, it creates these speed zones, right? So this was a speed zone on the way up. You lost the level, Boom, it closed that speed zone, and now maybe it's going to work its way back up to a little bit of a U-shaped pattern. You can see these speed zones all over the place. This was a speed zone, boom, recovered itself, right? Here was another speed zone right here, ended up recovering itself right here. There's one speed zone, though, that did not recover yet. This right here from July 7th. This is an enormous speed zone, big heavy volume that came through here. So that's going to be the big number right there. If you can get through the 50-day moving average sitting up here at 409.52, I'd like us to move back into that 414.50 level, which is that November of 2021 all-time high. It's a level we've had on the charts for a long time, big level. It's also just beneath this regressional trend line here that I have marked down from the all-time highs that were set back in December of last year. So kind of caught here in between the 100 and the 20. So watch your levels here. Take a snapshot of these levels, people, and just trade these levels. We held this level, this 190, 191 level pretty nicely yesterday. It's kind of a Fibonacci retracement at 390.97. Tesla likes the 61.8% retracement. Actually, the best retracement it likes is the 76. Where's that level there? The 70. I know it's up here somewhere. 76.4. So, if the market did pop up to that 432 level, that would be a level that you're going to get some resistance on. We do have one last open point of control, people. We've got a point of control that's open down here at 333.97. That's a little bothering to me. I like these point of controls to close before we move back in the next direction. However, just above us, we have an open point of control that was just created this week from Friday at 408.85. So if you can get above this 403 level, I do like us to push into that 408 level. And then above that, we do have a whole bunch of point of controls here that are open. Let me get to my point of control sheets. Where are you? So we have, we've got one here at 424.39. We've got a 444.31, 455.12, and then the last one we have up here at 478.39 is our last open point of control that we have there on Tesla. So, but you got to get through a few little areas here. Got to get through this 466 level in order to continue to push higher today. If you reject that, that can be your rejection level, and then we can pull back down here. And then here's yesterday's close at 495.40. But like I was saying, as long as we're above 393.63, I like the longs. Okay. So that's it for Tesla on the charting. Now, as far as what we're going to do for today, I'm using tomorrow's expiration date, which is July 15th. So we have 2 days of theta on this for this not to deteriorate so quickly. I'm going to have the 400 calls on there, and you can see we closed at 394, and we're about $4 higher. So these are going to open up in the high fours maybe on the premium side, and then I'm going to have the puts. I'm going to have a 390, and because we're $4 higher, these are probably going to open up in the mid $2 range, right? So what does that mean? That means if you buy a one lot, and let's just hypothetically say that the market's at $3.60. If I think the market's going down, I buy a one lot. My exposure is $360, and that is it. I can buy a one lot, I can walk away, I can go play golf. It doesn't make a difference. That is going to be my exposure. Now, how do you monetize that? If I buy a one lot here, I want the market to go down. And so when the market's moving down, this premium price is moving up. And how can you identify for dollar versus premium? So for most of the premiums that I trade, most of the strike prices that I trade have anywhere from a 40 to 50 cent delta. And what does a delta mean? The delta means that for every dollar that the equity price moves, this premium price will move. So if I'm trading at a delta, for easy math, that's a 50 cent delta. That means that if Tesla moves down a dollar on the put, no matter where I buy this put, it's going to move up 50 cents. So if I buy a put here on Tesla right now, and Tesla's trading at, call it $398, and it goes down to $397, $1, this premium will go from $3.60 up 50 cents to $4.10. And so what does that mean? If I buy a one lot, I made $50. If I buy a two lot, I made $100. If I buy a three lot, I made $150, etc. Right? So we're not trading options just to do a one lot, right? When you're first starting out, yes, you trade paper money, then you do a one lot, and then you figure out how to appropriately apply your risk strategy to it, right? So if you come in the trade room, I go over all of that stuff on how I identify my trades. The one thing I'm going to leave you with is when I get into a trade, the first thing I look at is where am I stopping out. That's the first thing I'm looking at. I'm not looking at, I can make $1,000 on this trade. Nope. I'm looking at where is my exposure. Why? Because nothing is 100%. Everything is about probabilities. And the more you sit in front of the screen, it's like you're practicing at the driving range trying to hit a golf club. So anyways, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button. Don't forget to go to the QOL website and put your name and email address in there so you can get our weekly newsletter that we put out. We've put out 17 editions so far. And also come on and join the Discord community. That is a free channel if you don't want to join all the extra stuff that we have there. But if you do, come and join the trade desk, and that is live trading from 9:30 a.m. to 11 a.m. Eastern time every day. If I don't see you in there, everybody, have a great day, and I will see you tomorrow. Watch out for 9 o'clock. Kevin Morse is speaking, right? Talk to you soon. Bye.